Hi, hello, friends. Welcome and good evening, every one of you. Welcome to InvestN, India's largest retail investors online conference. I am Ashok Devanampriya, the CEO of Traders Gurukul and also the host for today's program. It's a great pleasure to invite every one of you to the most influential stock investor conference of the year 2022. Before we kick off this session, I would like to thank our media partner Money Control Pro, the largest financial portal in India with millions of daily readership on their website. I would also like to thank our title sponsor Sher Khan, one of the leading stockbrokers in India with millions of investors as their customers. They offer online security brokerage and portfolio management services to institutions, large corporate houses and individual investors. They serve customers in India from the past 37 years. The speaker for today is Mr. Prasenjit Paul. He is the author of the Amazon best-selling book, How to Avoid Loss and Earn Consistently in the Stock Market. He has been investing in the stock market since 2010. That's almost 12 years now. I think he started at a very young age. Prasen, maybe you were 22 when you started? Prasenjit?
Right now I am 30, so even
So you started when you were what, 18?
yes, kind of, because while I was in college.
Too much, and that I'm really jealous of you for that. Anyway, shareholding pattern of Chemcrux Enterprise will reveal that he has generated 15 times return from the stock over the 2017 to 2021 period. Similarly, he has made 6 times return in investments like Lancer Container. And apart from these two stocks, his success list includes many amazing gems like Circa Paints, Canfin Homes, Kaplan Point Labs, Mayur Uniquoters, Ajanta Pharma, and so on during the very early stage. Prasenjit, it's a great pleasure to have you on board as a speaker today. Friends, he
Thank
is going to empower us with this interesting topic, investment methodology to safeguard investment in market correction. Dear Prasen, on behalf of Traders Gurukul, Money Control Pro, Sher Khan, I extend my warm welcome into this program as an elite speaker. Go ahead, my friend. The stage is yours.
thank you, Ashok, for the nice introduction. Good evening, viewers. So today's session covers investment methodology to safeguard investment in market correction. I'd also like to thank our title sponsor Sher Khan and also the media partner Money Control Pro. So before invest, just a standard disclaimer that this presentation is solely for information and knowledge sharing purpose. So all the examples should not be considered as an stock recommendation. I am a SEBI registered research analyst, so I am holding many of the stocks that I'll share in the presentation. And yes, it is possible that on any future date, I might exit from any of those stocks, obviously without prior notification. So this is why the most important thing before investing, kindly do your own research. Don't take any of these shares from this presentation as an investment advice. And obviously all the views shared in this presentation are all of my personal views. It doesn't represent the view of any entity or any organization. And then just an standard disclosure as per SEBI regulation. You can also see it from the screen, but just to give you a brief overview that the stocks that I'll discuss in this presentation, in those stocks, I have my personal holding, and I'll also discuss what are the stocks I have my personal holding while I purchased during the course of presentation. Apart from that, so as you can see, all the other remaining disclosures, I don't have, like, I'm not associated, I mean, not received any compensation benefit from of the subject company and all. So please remember just one thing, that whatever we'll discuss is just for knowledge sharing purpose, strictly not a stock recommendation. So today, what's our point of topic of discussion? So first, I'll share some basic but very important investing principles. Then I'll share the overall stock market outlook for 2022 for this year. And then my personal investment methodology during market correction or during the sideways market movement. Uh, at the same time, I'll share case studies with my portfolio stocks, and then I'll share my own portfolio multi-bagger stocks. One that Chemtrax Industries, I had made 15 times return, from Lancer around 10 times return. I'll share you the with all the shareholding pattern, the learning, and many important insights in this journey. And finally, obviously, the stocks, kind of stocks that I prefer to avoid, and then I'll end the session with the question and answer session. So let's start. The very first thing, that the very basic investment principle, but this is very important, that I'd like to share with all of you, is like, long term, there's a huge misconception about long term investing. Long term investing is not like buying any stock and holding for long term. It's not like that I'm buying a stock and then I forget about it and then I am holding it long term. No, it's all about buying a share at long term view, but keep reviewing whether the investment rationale remains intact or not. Because with the changing environment, today's great stock, say for example, a stock may be great for today, but even after 1 week something happens, or after one quarterly result, it might completely change. So if I exit from any stock within 1 month, it's not like that I can't say myself as a long-term investor. Yes, while we purchase a stock, I keep view over the long run, but after investing at any point of time, if my original investment rationales no longer there, then I shouldn't hesitate for selling. So this is why exit or selling can be within 1 month, within 10 months, within 1 year, 10 years, 15 years, whatever. As long as my investment rationale improves, I will keep holding. But the moment my investment rationale reverse, then I should exit. So long-term investing, again, I am repeating, is not like buying today, forgetting, and then holding for long term. No, long term investing is all about buying with a long term viewpoint, but keep reviewing the investment. And whenever your original investment rationales no longer remains valid, you should exit. The next important point, while you exit from a stock, never ever focus on the purchase price. Otherwise, you'll get stuck. For example, suppose I have purchased a stock at 100 rupees. Now, after one few months, the stock price now at 80 rupees. And on that point of time, I realized that I made some mistake, be it on the management assessment, or be it on the company assessment, or whatever. Or if I realize any of my investment rationale is no longer valid, and then if I look the current market price at 80 and my purchase price at 100, maximum investors, what they tend to do is, okay, let's the stock price move to closer to the 100 so that my loss will be minimized, and then I'll exit. Never ever do that, because most of the time, if you keep waiting for the stock price to reach to your purchase level, most of the time the stock price keeps sliding and then widening your loss. So whenever you sell any stock, no matter whether you are selling at profit, loss, whatever, never ever concentrate on your purchase price. Purchase price shouldn't be any criteria while you are making a sell or exit decision. This is a very major mistake that many investors do. And these things you need to remember in your mind, that if you focus on your purchase price, you'll surely stuck. You can't take rational decision. The third major mistake that I have noticed among many stock market participants, that loss making trading positions turns into an investment. Suppose you have purchased a particular stock, you are thinking that, okay, within 1 week or 1 month or 2 months, I'll close my position, but somehow that position turned into a loss making position, and then you turn a long term investor. No, I'm, as it is in loss, so I'm now a long term investor. Let's my loss recover and then I will sell. Please don't do that, because most of the time, maximum time, by doing so, your loss will only widen and poor quality stocks will accumulate in your portfolio if you keep doing that. So there's a very famous saying that never invest like a trader and never trade like an investor. This is applicable both whether you are a trader looking for short term, long term, whatever. Before investing or before taking position on any particular stock, make sure whether you are, I mean, opting for as an investing position or trading positions, what's your investment rationale, what's your trading rationale, whatever be it. After that, stick to that. Your exit should decide depends on that initial decision. It shouldn't depend whether that position is loss making or profit making. So while you exit, you should forget about profit or loss. You should concentrate on the process, and you should be very much clear about the process, about the path that you will follow even before taking any position, be it investing, trading, or whatever. The next few principles, like I want to add this: stock price is just a number. It has no relation with valuation. Many times what I have noticed, and investors say that last 1 year or 6 months the stock price already doubled. So it doesn't necessarily mean that in future it can't repeat the same. Future stock price movement won't depend on whether the stock price doubled, tripled in the past. It solely depends on the future potential of a company. Whenever you are investing in any stock, never ever focus on the absolute value of the stock price. Always remember, a 2 rupee stock can be expensive than a 2000 stock. In my book, which is Amazon bestseller, How to Avoid Loss and Earn Consistently in the Stock Market, I have described in details and many such misconceptions and investing biases that cost investors. Now here I'll quickly move into our next point of discussion, that is the Indian stock market outlook for this year 2022. We all know that 2020 and 2021 were great for equity investors. In fact, 21 experienced the highest number of IPOs. Majority of the market participants, whoever are there in 2020 and 21, made easy money. Most of our portfolio moved up by 40, 50, 60, 100% kind of. Even my own portfolio, if we consider all the stocks, microcap and all, was at one point of time was showing more than 100% return. So those are great year. As per my personal view, 2020 is not expected to be in a similar note. We all know that volatility, crude oil price, rising commodity price, as per my view, these things will continue, and these things will put pressure on the input price or raw material price of most of the companies. Global uncertainties, be it war in Ukraine and Russia, and lot of others, be it Fed, US. So global uncertainties will continue. And most importantly, even if we talk about the domestic factor, some big ticket IPO, mostly LIC IPO, will suck liquidity from the market. So not only the global factors, but domestically, if I say LIC IPO, such a huge IPO is sufficient enough to restrict any kind of liquidity driven rally. So while I say that LIC IPO, how big ticket IPO can restrict market rally, we already noticed in the past, like back in January 2008, Reliance Power IPO. On that time, that was the largest IPO, and we all know after January 208, what happened in the stock market. Even if you follow the very recent example, Paytm IPO back in just November 21, so that was 18,300 crore IPO. That was largest in 2020, 2021, and if I'm not wrong, that's also largest IPO on that point of time. So what happened, even after Paytm IPO, many new age firms like MobiKwik, Oyo, who are planning to come up with IPO, they are forced to postpone. And why such thing happens? It's very simple. So for example, the upcoming IPO 70,000 crores, it means various investors, be it mutual fund, foreign investors, domestic investors. So all of our 70,000 crores of money will go into LIC IPO. So it means, suppose a mutual fund today may have 200 crores of liquidity, 200 crores sitting at the bank account. If there was no LIC IPO, that 200 crores might be invested in some other stock, or maybe in some other firms. But as such huge amount is going to on single IPO, then automatically it is sucking out liquidity from this system. And this is one of the primary and very major reason that I'm not expecting bull run like 21 to repeat in 2022. Not only global factors, not only the external raw material price, crude volatility, but domestically, even if I consider our uh, domestic factors, this single reason is enough to restrict any kind of liquidity driven market rally. But does it mean that we shouldn't invest, we should get away from the stock market? Obviously no. uh, at any kind of market situation, there are always opportunity in some pockets. Yes, whenever the market remains sideways or in the correction mode, yes, the opportunities become lesser.